Hi, random people on the internet. Until today, I still can't get over the fact that I'm speaking to a camera and there are thousands of you out there listening to this in your free time. So I can never take your time for granted, and I hope that you have enjoyed your journey with me here thus far. Now, the entire finance YouTube space seems to be experiencing some sort of paradigm shift where everyone is just issuing out challenges to each other, and some even restarting a new 1 million portfolio for their audiences. How can I miss out on this fun? I heard smashing the like button is pretty fun too. Of course, I don't have $1 million just sitting around right there, not for starting a new portfolio and neither to donate it to charity. So I'll take the chance to kick off my own challenge. So I will do it with $15,000. Oh, and just to clarify, it's 15,000 Singapore dollars and not USD. So in order for me to make this challenge more realistic, I want to both measure the impact of actively investing, which is essentially trying to time the market and also beat the index, and also simulate the real life scenario of an international investor, where he or she will have to bear the brunt of FX fluctuations. So I've actually taken the liberty to convert the 15,000 Sing dollars into USD, and based on the time of the exchange itself, it amounted to around 10,680 US dollars. So let's just work with that figure. Also, to walk you through some of the ground rules for this entire challenge itself, and also what I have done in that particular account over the last few weeks, I first deposited 2,500 Singapore dollar into the account on the 25th of May 2022. I subsequently deposited the remaining 12,500 into the account on the 8th of July 2022. So if we were to abide by the lump sum investing approach, so I would have about 27.63 shares of SPY with an average price of around $390 give or take. So just a side disclaimer as well, as you can actually observe, even though the total amount of United States dollar in the account is supposed to be $10,687, but in my own calculations, you can see that there's actually an additional $100. So simply put, Webull is currently running a promotion until the 14th of July 2022, where new users who sign up for an account and make an initial funding of at least 2,000 Singapore dollars will get a fractional share of Apple worth 60 United States dollars. However, you'll also need to maintain a net cumulative deposit of at least 2,000 in the account and execute one buy trade within the next 30 calendar days. On top of that, if you were to go one step further and execute 5 more buy trades within the same 30 days, you will get an additional 40 USD worth of Apple shares. And that's a total of $100 worth. Depositing 2,000 Singapore dollars, keeping the money in that account for 30 days, and executing 6 trades yield $100 USD in terms of sign-up rewards. That's a 7% return on a 1-month basis. So to just show you my own trading history, I executed 6 buy trades on Amazon to qualify for the promotion. And within 2 weeks, they credited the free Apple share into my own account. It's a tried and tested promotion. So Webull is also committed to providing a zero commission brokerage platform, and judging from my own experience, you can just execute $10 worth of fractional buying and you'll be considered for the promotion. So this promotion ends on the 14th of July 2022. Link in the description box. Now, after accounting for the differences, just to reiterate, I funded 15,000 Singapore dollars into the account, received $100 USD worth of Apple shares for sign-up rewards. Hence, my initial USD capital after conversion is $10,787. So let's set some ground rules for this portfolio. And of course, since it's my portfolio, I shall call it the falling knife portfolio. And in the name of responsible investing, I probably wouldn't concentrate it like my own personal portfolio that I share on this channel, which has like a 80% exposure to Alibaba. Lol. Number 1, I will set a hard limit of 30% on a cost basis for any company I wish to own. So that will mean that I won't go over $3,000 on a cost basis for any particular stock counter. Number 2, I will not be doing any fanciful strategy in this portfolio. So this will purely be a long-only portfolio. No long short, no fancy option strategies of synthetic shorts, poor man covered call, spreads, etc. Just boring investing. Because if you haven't realized, I'm quite boring. Number 3, I would try to stay away from buying into ETFs. So I've actually accidentally bought into Vanguard Total the previous time around. So this will be the first and also the last. Number 4, Preferably, I will try to inject additional capital on a yearly basis for easier accounting treatments and comparisons with the index as well. Of course, I will still be updating you guys on what I bought or sold along the way in my own personal portfolio, if I want to, of course. So, you should actually consider subscribing to make sure that you are apprised of the developments and also hold me accountable. Wink wink. Number 5. I'll try my best not to have any overlaps between this falling knife portfolio and my own personal portfolio. So for long-time viewers, I suppose you already know what I'm incredibly bullish about, which is essentially the entire Chinese tech sector, despite what everyone else has to say about it. And currently, I hold a few individual positions, namely Alibaba, Tencent, and Meta platforms. Therefore, in this falling knife portfolio, I'll give myself the challenge that I cannot quote-unquote recycle ideas, and hence, I cannot start a position in any of the said 3 companies in this portfolio specifically. So on top of that, to hold true to the falling knife reputation, I will only start buying if the said company that I'm interested in is at least down 30 to 50% from its all-time highs. So I know it's a tall order, especially in a bull market. However, given the current sentiments and the current backdrop of the entire stock market, I think it's quite easy to discover investment opportunities that meet that specific criteria. Lastly, the most important rule. Rule number 6 is I can change the rules anytime. Welcome to China. Jokes aside, you have my word that I'll try to follow the first 5 rules to the T. But if there are any changes, I'll update you guys accordingly, and I'll regret to do so. Now, to just give you an interim update of what essentially transpired, I currently still have around 9.3 thousand USD in cash waiting to be deployed whenever I think that I've studied a certain company enough and am happy with my own quote-unquote conviction and valuation as well. Yes, I will have to pay for the cash drag, but the simple goal is to just beat the S&P 500 in the long run, and also a testament to whether I have the ability to quote-unquote beat the market or I'm just another clown on the street. So I'm still holding on to the free Apple share given to me, so I don't think it will have a huge impact on my performance anyway. So I've also accidentally DCA'd into Vanguard Total using this account, so I'll just leave the $250 in here just to act as a form of a benchmark against a worldwide index. So I'm not buying any more of it subsequently. I've also started a small position in Amazon initially as a means to qualify for the 6th transaction to get a free Apple share, but subsequently took interest in studying the business myself. Personally, I think out of all the mama stocks, Meta, Apple, Microsoft, Alphabet, and Amazon, it seems like Meta and Amazon has quote-unquote lost their story, which resulted in this falling knife phenomenon. So I'm currently still spending some time to really thoroughly understand Amazon. But yes, it's in my radar for some time already. So the recent announcement of the collaboration between Grubhub and Amazon Prime is enough to scare investors out of Uber and also DoorDash, even though they subsequently recovered in terms of share price. But Amazon's business model never fails to amaze me as a disruptor platform. So they disrupt wherever they go. I still, however, need some time to ascertain the entire economics and how they continue to drive long-term shareholder return, because it's not a simple business to understand. My simple brain needs more time. So the company I recently added into the portfolio is actually Taiwan Semiconductor. I know, people will immediately bounce up saying that as a value investor, how can you buy something like TSMC, which is essentially trading at like 18 times PE, whereas Intel is only trading at 6 times PE. And not only that, are you not afraid of the Taiwan-China problem? Number 1, I've never claimed to be a value investor. Number 2, if the definition of being a value investor is to only be able to buy companies with a low PE or a low trading multiple, giving no regards to the strength of the business, then I'd rather not be a quote-unquote value investor. That said, I know that buying into Alibaba and also Meta platforms feel very much like a value play. The problem is that I don't buy into the argument that their businesses are severely impaired, so I think it meets my own criteria for having a position in my portfolio. Number 3, if I was really afraid of the Taiwan-China issue and how the world is going to collectively sanction China like how they put it, so scary, I wouldn't have a portfolio of 90% China exposure. So this is just to give you some background context. Now, back to discussing about the business itself. I think TSMC is at a very interesting place. I like the semicon industry, and if you haven't noticed, I love putting myself in incredibly challenging industries. Chinese big tech, US social media, Taiwan chip manufacturer. How much riskier can it get? So I understand that the chip industry might be potentially facing headwinds in the near term, and the entire basket of equities in that specific industry is easily swayed by news in the past few weeks. Firstly, you have Micron providing weak guidance. Everyone tanked. Subsequently, Samsung delivered strong results. Everyone rebounded. But if you have to think about it, if there's no problem, why would there be opportunities, right? I'm still fairly new in the semicon space, and I'm definitely not an expert. But fret not, there will be a TSMC video soon. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!